Hello all and welcome to a portfolio review at Finominal UK, where today we'll be taking a look at the JPM Smart Alpha Risk Level 5 portfolio. Now, for those of you who don't know, Nutmeg recently had a rebrand. They're now called JPM Personal Investing. And this particular portfolio is their highest level of active management, primarily invested in active ETFs designed to outperform the market, known as Alpha. So looking at the asset allocation for this portfolio, so this is just based off of their current holdings information. I was able to go into my dashboard on Finominal and create portfolio and then replicate this here. I have already pre-done this and we'll be analyzing this using the portfolio analyzer. In regards to the benchmark, the Finominal platform suggests the FTSE Developed index, which it suggests based off the highest ratio of correlation to tracking error from a universe of well-known benchmark indices. In regards to what JP Morgan use as their benchmark, they actually use the Asset Risk Consultants, so ARC indices. Specifically for the risk level 5, they use the Sterling Equity Risk Index 80 to 120% equity risk. For us to replicate that within Finominal, we do actually have our own benchmark model portfolios. So for this, it would be the Benchmark UK Global 80/20 Aggressive. So she'll select that as the benchmark just so we can kind of see a like-for-like basis based off of their benchmark that they're using. Looking at fees, we can see fund fees of 0.25% versus a benchmark of 0.25. So these are quite cheap funds, which of course is great to see. However, before I continue with a further analysis, that is slightly misleading, is what I would say, as that is, as mentioned, just the actual fund fees. In regards to the Smart Alpha portfolio, the totality of the fees actually comes to 1.14%. Because if you want to invest in this portfolio, you do need to be on the JP Morgan Personal Investing platform. So quite expensive is what I would say overall when you account for all other fees. In regards to compound annual growth rates, 14.7 versus 14.2 for the benchmark. So quite similar, overall just slightly higher. Has seen slightly less volatility though, 10.8%. Max drawdown slightly less as well, 15.52, and a Sharpe ratio of 0.96, so decent but suboptimal. Now, one thing that sort of screams out at you straight away is this graphic here, performance benchmarking. For something that's meant to be the highest level of active management, if you look at this chart against its benchmark, I'm not seeing where this active management is actually coming from, especially if we look at correlation of 0.87. Of course, this is just based off of the current holdings, but regardless, I'm not seeing initially where that is. In regards to its actual performance against its benchmark, if we look at their lovely marketing materials on their website, we can see over the past 3 years, just over 58% versus plus 33% against its benchmark. But if we actually compare that against its benchmark, that's actually only just 1% above the benchmark. The reason why I'm highlighting this again is because this is an actively managed portfolio, so they say this is just based off of these holdings, whereas being able to see this against their actual information is very important. Now, we actually switch the benchmark to the FTSE Developed index, which the platform recommends. This is where things get quite interesting, is what I would say, because over the past 3 years, the FTSE Developed index over 3 years has actually performed at 64.69%. So actually, it's underperformed against this benchmark. So this is very misleading, is what I would say. Now, I will switch back to the other benchmark which we were looking at before continuing. We will look at the sectors information, and again, this is portrayed further of that sort of composite index fund tracking, within about 10 bips within most of the sectors here. Looking at alpha and factor exposures, overall the equity factor exposure has consistently mainly been the quality factor, though we have seen a slight downtick in that recently. Now, we're seeing 9 holdings here. If we wanted to look at simplifying that, we could actually simplify this with just one security, the Vanguard FTSE Developed World UCITS, which is also cheaper at 0.12% and has also slightly outperformed as well. So a relatively short and sweet analysis for this portfolio. I can quite comfortably say it did not do what it says on the tin for something that's meant to be the highest level of active management and also underperforming against its benchmark. So that's what I would say on that. That brings us to the end of this portfolio review video. If you do have any funds or portfolios you'd like me to analyze, please do let me know. Would love to get into it. But other than that, please do like, subscribe, and shall see you in the next one. Thanks all.